All right, so for this particular project, we were asked to come up with our own investment strategy and then test it. So what I decided to do, something that's always has been an interest to me, is comparing dividend paying stocks. And so my strategy is I wanted to compare low paying dividend stocks with high paying dividend stocks. In my strategy, what I think is going to hold true is low paying dividend stocks are going to have better returns than the higher paying dividend stocks. And when I say that, you might be thinking, well, that doesn't make any sense because you think higher paying dividends, higher yields would increase the amount returned, amount returned on your investment. Well, my thought process is the lower the paying dividend stock, there's a reason that they don't have to pay out necessarily a high dividend. It's because they're able to grow. They have a company that's growing. They have a company that has strong financial statements. They have a company that has a lot of momentum behind it, and people are investing in the company. So they don't necessarily have to pay a dividend to attract investors. Now, on the flip side of that, the higher paying dividend stocks a lot of times are trying to get investors to invest in them, which could be the reason that they do pay a higher dividend, which could be attractive for maybe a novice investor by looking at the dividend yield without knowing a whole lot about the company, or even really understanding if the company's going to have the cash to pay that dividend, or if that yield might be deceptive with the type of return that the stock has over time, that yield goes down as the stock price goes up. So that was kind of the strategy that I wanted to test. Was I wanted to compare the low paying dividend stocks with the high paying dividend stocks. And there's three components to what I did. So one, I wanted to use the Dow 30 companies, and all I did for that was I just basically sliced the Dow 30 companies into 15 higher paying ones to 15 lower paying ones. I just sliced it down the middle and I compared them. And I also brought in 5 stocks from outside the Dow 30 to compare them to use in my analysis, which would be 5 just random companies that pay high dividends. I brought them in because I wanted to compare them with some of the lower paying dividend stocks in the Dow. What I did was I ran 3 different scenarios. So the first scenario is going to be the top Dow 15 dividend paying stocks versus the bottom 15, and then I'm going to do the top 5 Dow 30 companies versus the bottom 5 in terms of dividend yields. And then I also took the bottom 5 Dow 30 dividend yield companies in the Dow 30 versus just 5 random companies that pay high dividends. And I wanted to compare their dividend with their, essentially the return. I wanted to see if the higher the dividend or lower the dividend, the better the return. And to do that, I ran the t-test 2-sample assuming unequal variances. So I used that test in my analysis, and I wanted to see the correlation, if there was any, and I wanted to see if the 2 different test groups were statistically different. So jumping into my analysis, the first analysis I did was I looked at the top 15 Dow companies, and as you can see, AT&T is the company that pays the highest dividend yield at a 5.06%, and then the bottom 15, and like Bank of America pays basically a 0.9% dividend yield. And I wanted to see, all right, is there a correlation? Do the companies that pay the higher dividend have better returns than the ones that pay the low dividend? And in running my test, you can see I ran the 2-sample assuming unequal variances test, looked at the p-value, and if that p-value is less than 0.05, that would tell me that there is a correlation and that they're statistically different. In this particular analysis, you can see that p-value is 0.3078, which tells me there is not a correlation and they're not statistically different. So that, I guess, the first test I ran kind of goes against the strategy that I had in my head, that the lower paying dividend stocks would give you actually a better return than the higher paying dividend stocks, because according to the numbers and the analysis we ran, there is no correlation. So to dig deeper, I wanted to look at just the top 5 paying dividend stocks in the Dow 30 versus the bottom 5 dividend paying stocks in the Dow 30, and just compare. And if you do the eyeball test, you can see, there's not a whole lot of difference in terms of their returns that they're getting, whether they're paying a high dividend or not. But in order to make the eyeball test a reality, you run the test, and you can see that the p-variable is at 0.3340. So it's actually moved further away, showing there is no correlation and they're not statistically different. So my third and final test I ran was I took the bottom 5 Dow companies. I took the bottom 5 and I compared them with just 5 random companies. I picked Compass Diversified Holdings, the Vector Group, Legacy Reserves, Windstream Corporation, and Arlington Asset Investment. And those are companies that pay high dividends. You can see they pay anywhere between 8.5% and 12.9% of dividend yields. And I compared them with the lowest paying dividend stocks in the Dow. And I'm thinking there has to be some sort of a correlation between the dividend payout and the stock price. Ran the test, and there is still no correlation. It moved down a little bit, but the p-value is 0.27. And remember, it needs to be less than 0.05 in order for it to show a correlation. And there is not a correlation even with the highest paying dividend stocks and the lowest paying dividend stocks on the Dow 30. There still is no correlation, and there is no statistical difference between them. So in closing, my strategy, what I thought was going to be true, is unfortunately wrong. Low paying dividend stocks and high paying dividend stocks are not correlated. They're not statistically different from one another. So in essence, when you're looking at investing, if you think that the lower the paying dividend or lower paying dividend, the better the investment, that's not going to hold true. And you just need to keep that in mind. Always go to the financials. Always dig more into the company. Learn more about the company before investing, just based off of maybe what a dividend is telling you. Thank you.